Looks like it's time to restructure my investment portfolio a little bit, and to start off, I'll just take some cash and figure out where to put it. Now, EQ Bank has been pretty good to me to date, and the concept is easy to understand and use, and the rates are competitive, not always the highest, but definitely in line. And I'm just laddering into GICs for now with rates up to 7.5%. I also have the BMO High Interest Savings Account. This is liquid and a decent rate, and it's also CDIC insured, currently at 4.75%. And the nice thing about that is it's part of my BMO investor line, so it's easy to move money around within the registered accounts. So next we have bonds, and again, the BMO investor line account. Of all my accounts, it's by far the simplest for fixed income, and I'm able to buy and sell a multitude of different investments there. The thing I have to figure out still is what allocation I'm going to have between real bonds and bond funds or ETFs. The idea is that when interest rates reverse and start to come back down, that sets up the option of a capital gain if I do it correctly, or I can just continue with what will be a higher interest rate to maturity on the actual bonds. So then moving on, I have ETFs, and specifically cash alternative or high interest rate savings account ETFs. Now this first one actually isn't a high interest savings account because it is T-bills, but for my purposes it's classified all the same. Before I go any further, something again to remember is that I'm just using 100% leverage. So I share this as somewhat of a personal record to myself and certainly not as any advice to anyone. I always go to the official website of funds to get a sense for what I'm investing in, and I'm certainly not a qualified researcher. My research relies on input from many different sources and people, and then I come to the best conclusions that I can. YouTube and social media are also good to create ideas and listen to different perspectives. Here's a YouTube channel that talks about this C-bill fund. He seems legit and actually has some sort of investment business called Stock Trade CA. However, after watching any videos or reading any literature, the key takeaway for me to remember is not to just blindly follow what I call, just random people or even so-called experts. I carefully think through because I believe no one really knows for sure. And that said, however, I personally do like managed funds. This is contrary to what many people feel, or at least the do-it-yourself investors. And it seems to me that there's a lot of repetitive messaging in the investing community. And I also believe in financial advisement. Getting proper professional tax and benefit advice, I think, is important. Unfortunately, it seems in most cases that you need a certain level of wealth to justify it. And, I'm not going to talk about this now. I think I'm just going down a rabbit hole on this one, so I'll get back to it another time. So I scan through the material and make notes and try to think of different scenarios. And I'll just fast forward through all this process here, as it does take some time. And I compare similar funds. I don't get too hung up on the certain specifics because I recognize that, I'm not going to fully understand everything and be able to accurately assess all risks. So hopefully this doesn't come back to haunt me one day. Now, there's many other ways to accomplish something similar to what I'm just scribbling down here, and that's comparison. And here's a comparison chart from TMX Money website. They have really good breakdowns of anything that trades on their exchange, and there are many other investigation and tracking tools from various sources. So as a summary, I have a base of cash, mostly CDIC insured and liquid, but also laddered GIC of different maturities up to a rolling 2-year for now. And next I have that bonds, or the opening for bonds. I have to do more research on how I will invest in them and what percentage will be directly versus in a fund. And I think of things in layers. So inside my investment accounts that don't offer access to actual high interest savings account or shorter term GICs, I'll use the ETFs, and I'm choosing C-bill, the Horizons 0 to 3 month T-bill ETF, and then secondarily C-Save and PSSA, the Purpose one. And the reasoning for this is that it creates a bit of diversity, since many of these ETFs that I've seen are heavily weighted towards National Bank. So that takes care of what I consider to be most of my cash position. But I do have other alternative uses that may get a better return with certain trade-offs, but that's for another time as well. So now that I have my cash set up, I need to start investing. Layered with managed, and then I'll have indexed and sector funds, both managed and indexed. And then I'll have my various stocks and future classes of investments. So I'll keep expanding on this as I see opportunities to invest the cash. and while at the same time preparing for the upcoming interest rate increases on my loans. On another note, moving forward, I'll be investigating and working on 4 different areas, because for myself, there's a lot more to investing than just the stock market. And that's real estate, stocks, but I class it as public, private or business, and alternative and discovery. And that's it for now.